The government more than halves windfall gains tax on crude to 4,900 rupees from 10,200 rupees a ton. Taxes on diesel are also cut while the levy on ATF is unchanged.
Eicher Motors Royal Enfield sales failed to meet street expectations as sales rise over 35% on a year-on-year basis. The stock is down 2.5%.
BB Fintech is the other one. 5.1% equity changes hands in two block deals with SoftBank likely to have sole stake in the company.
Paytm at its analyst meet says it expects to break even on EBITDA by September 2023. Brokerages like Goldman Sachs and CLSA, they raise their target price.
Westlife Foodworld says it sees its revenues reach 4,000 to 4,500 crores by FY27. Expects restaurant count across the country in the west and the south to cross that 600 mark and believes that the long-term potential is in excess of 1,000 outlets.
Hello and welcome to Chartbusters. I'm Nigel D'Souza and joining me as always is Mangalam Malu, who is feeling good on this Friday morning.
Everyone feels good on a Friday night.
We're looking forward, Mangalam, to get through this day and then, go ahead and enjoy the weekend. But we got a couple of managements for you today on the show. And let's start off with the Sanghavi Movers. Remember, that's the largest crane rental company here in India. It's a good quarter, actually. There's been margin expansion as well in the quarter gone by. But to understand more about how things are shaping up and just to tell our viewers, it's a play on the infra space. If their cranes are getting taken by their customers and if the utilization levels are higher, that means that the infra boom is really taking place on ground. Rishi Sanghvi, the managing director of the company, joins us on the show. Hi, Rishi. Thanks so much for joining in. Well, I recall a few years ago when your utilization levels were low, the yields as well were low, and that was a pain point for the business. But as per your last quarter, utilization level is around 82%. Can you give us an updated number? Has the utilization levels moved up? And also, I wanted to ask you, how much of your contracts are on a long-term basis and how much on a short-term basis?
Good morning, Nigel. Thanks for having me on your show. So we see utilization levels going up from 82% to nearly 90%, which for us is an effective utilization of 100%, considering the movement of our equipment and downtime. Typically, our contracts are of 4 to 12 months. And nowadays, because of the shortage of cranes in the market, our customers are talking about long-term contracts for 24 months.
And what happens, to long-term contracts, etc.? Because I ask this typically because the first quarter, your utilization was 84%, whereas your yield was 1.7%. Whereas the second quarter, your utilization moved higher to 82%, but your yields moved even higher to around 1.97%. So are these long-term contracts or these contracts coming at a higher price? What's the outlook that you can give on the yields?
Right. So as utilization reaches 90%, we expect our yields to cross about between 1.9 to 2%. Now, we have a hybrid strategy of long-term contracts and short-term contracts. So we typically book out half our capacity for long-term contracts and leave the balance half so that we can take advantage of market dynamics and also factor in cost pressures.
Rishi, if I'm not mistaken, at the boom period, yields were around 2.5% or even more than that. Do you see that sort of a scenario playing out? And you mentioned a couple of times that there's a shortage of cranes and you have 50% of your contracts that are long-term and 50% is left open. So given that sort of a backdrop, you'll have pricing power with you as well. Is that correct?
So, for our long-term contracts, there's not much margin to move on pricing, but those that where we have capacity that is going to go online in the next financial year, we see that there will be movement in yield, and this will have a direct positive impact on our top line.
To what?
I don't see yields crossing to with about 2%. We are hopeful we can push it up to 2.15. But 2.5 is something in the past.
All right, so 2.15 to 2.19 is what you can do, not to 2.5, but you do see yields moving higher. Take that point, Rishi. I wanted to, I was looking at your presentation and one thing really stood out. From last year to this year, in the first half, the contribution from cement increased from 2% to 11%. Did you add any new client here? What sectors do you see more growth coming from?
Absolutely. So cement, Nigel, I believe all the sectors in the infrastructure segment are firing on all cylinders. So cement is a big area where capacity addition is coming in, and there's a lot of brownfield and greenfield expansion where we believe almost 20 million tons per annum are going to come online in the next 2 years.
Okay.
Besides cement, there is steel. There are expansion projects in Kalinganagar, Bellary, and Dolvi, and all these, and Angul as well. And this is going to add about 5 to 6 million tons per annum.
Okay.
Besides steel and cement, refineries are firing on all cylinders, and most of the refineries have an expansion or downstream upgradation, and we believe that this is going to add another 30 million tons per annum in the next 4 to 5 years. Besides cement, steel, and refineries, the power segment is also booming. NTPC is going to add about 10 gigawatts, and the wind energy is going to add between 4 to 5 gigawatts every year.
Okay, all right. Rishi, the other catch-22 situation is now you have to add capacity, right? Because you're at 90%. So are you looking to add capacity? I'm looking as per your 30th September presentation, 389 were the number of cranes I think you had. Are you looking to add capacity, and how do you fund it? Your debt as of last count was 255 crores.
So last year we did a capex of 120 crores. This year we are projected to end the year at around 150 crores. And next year we are targeting a capex between 100 to 150 crores, subject to our board's approval. So between these 3 years, we would have done a capacity addition of approximately 400 crores. And we're looking to add large-sized crawler cranes that are typically between the 800 to 1,000 metric ton class. So we will be adding about 15 to 20 of these large units in these 3 years. And our capex is primarily funded by a mix of long-term debt and internal cash accruals. So 70% of it is long-term debts and 30% is internal cash accruals.
So if I see this right, 450 crores worth capex, 70% comes in from internal and 30% from long-term. You do about 2.5% sort of yield. So does this mean that we're, expecting that kind of return on the capex that you're putting out as well going forward as utilizations increase?
So our yield numbers are a blended average yield between our old equipment and our new equipment. Yeah. Typically, new equipment has a lower yield. It's between 1.6 to 1.8%. But yes, we do expect that sort of return on the equipment, where the payback period is between 5 to 6 years.
All right, and quickly before we let you go, just a couple of points, Rishi. Your market share versus the other players in the market right now, and where is that going? And secondly, I remember in the peak, we used to have a lot of mutual fund investment in the company, but now as we speak, it's gone down to virtually nil. So what are you doing for institutional investors? So first, your market share. Secondly, institutional investors.
So the crane industry is largely an unorganized industry, and we're the only organized listed player in the crane industry. We command between 60 to 70% market share, depending on the industry and type of crane.
Okay.
And as far as mutual funds are concerned, we have been doing a lot internally in terms of consolidation over the last few years. So we have been able to improve our EBITDA margin. It has now crossed 50%. We've been focused on shrinking our cost base and really returning value to our shareholders. So I believe in the next few quarters, we would see some interest from the mutual funds in Sanghavi Movers script.
Oh, that'll be good for you. But Rishi, you said that out of the organized market, you have 60-70%. How much is the organized market as a total, industry size, as a percentage?
So there are about 10 to 15 players, and Sanghavi Movers capacity is equal to the next 5 largest players put together.
No, I got that. I was asking you the breakup between organized and unorganized.
So there are only 3 to 4 organized players. The rest are retail competitors.
So 90-10, what will it be? 80-20, since bulk of it you're saying is unorganized. Do you have a number there?
Yes, so that's right. 80% of the sector is unorganized and 20%.
Okay, good speaking to you, Rishi. Thanks so much for stopping by. It's been a few years actually since we had you on the channel. So good speaking to you. You're giving us a sense that the infra demand is up and running because the demand for your cranes are coming back as well. Thanks so much for stopping by.